And now we're going across to Anil Padmanabhan, senior economic journalist, who is with us to talk about this latest revised monetary policy of the Reserve Bank of India. Good afternoon to you, Anil. What do you make of this repo rate cut? Apart from the kind of stance that the RBI has kept, it's kept it as neutral, gives hope for further rate reduction if everything goes according to plan and there aren't too many shocks to the system delivered from outside.
Gautam, we'll have to hold our breath on future rate cuts for now. But I think you have to don't see this rate cut in isolation. You have to see it in the context of what the finance minister did on budget day on Saturday. So the kind of tax giveaways of about 1 lakh crore, and your colleague has just talked us through how this will play out in the economy. For the middle class, the bonanza continues because the FM doled out a lot of giveaways, and now the Reserve Bank, by cutting interest rates by 25 basis points, has signaled cut in all. Since everything is linked to the RBI rate, you can expect EMI rates, housing, particularly housing loans, etc., to start coming down, and education too. So all in all, it augurs very well for a consumption boom. So this RBI Finance Ministry Jugalbandi has once again struck, and it's 5 years, like your colleague pointed out, since RBI cut rates. But I would say that hang on to this, and it augurs very well for the economy at this point of time.
Okay. What are the other moves apart from the budget? You mentioned the raising of the rebate that is there till 12 lakh. It was 7 earlier for those who take up the new income tax scheme. Apart from that, the RBI had taken some steps in January, before that in December as well. Do you think everything is adding up to ensure that India could see up to or maybe beyond a 7% rate of growth for the new financial year?
Yeah, I would like to believe that, Gautam, but there's a big if here, which is India Inc. So they have been holding back their purses on investment for years. And despite many inducements, and despite the government of India running with the mantle, stepping up its capital expenditure, almost trebling it in the last 5 years, the private sector continues to drag its feet on investments. But they are running out of excuses, because now the ecosystem for investments couldn't have been any better given the circumstances. Please remember, we are living in extremely inclement times, particularly globally. Nobody knows which way the world economy is headed. There's a trade war that threatens to unravel any point of time. And given the state of the US economy, they are not going to cut interest rates, which means the rupee will continue to be under pressure. So given this circumstance, this is the best window open for India Inc. with this big boost in consumer demand that the FMS initiated. As the governor said in his credit policy, the rural demand is fine and doing very well because agri has recovered. So this is the best moment to step in with your investments.
Can one readily expect the banks, the commercial banks, which do most of the lending these days, retail, particularly in retail, they'll pass on this repo rate cut to potential or even existing borrowers?
See, Gautam, we have seen that pass-through has improved over the last few years. It will not be instantaneous because there are some other macroeconomic conditions operating right now. The liquidity conditions are a little tight, and presumably the Reserve Bank of India will solve this problem. The governor has signaled as much, but we'll have to watch their actions. Once liquidity improves, the commercial banks will be in a better position to lower the rates because they'll be able to lower the deposit rates. Right now, they are very tight. So hopefully there's another step which will come through. Last week, I think the RBI released fresh liquidity into the system. The liquidity is tight because there has been, due to the rupee's depreciation, the Reserve Bank of India has been buying up money from the market. So it's an if and but they should. Normally, the pass-through is far more efficient than it was, say, even 4 years ago.
All right. Well, let's hope that that happen soon, because that will again add to the renewal or the reinvigoration of the consumption cycle, with people taking additional loans and or having extra money in their hands if their EMIs go down. Thanks a lot for joining us for the moment, Anil Padmanabhan.